Around 12 million UK residents are expected to file a self-assessment tax return for the 2021-22 tax year. If you're not one of them, a reduction in various tax allowances means that you might have to join that 12 million people next tax year. Before I get into the details of the tax changes, let's quickly recap why some people have to complete a self-assessment tax return. Most taxpayers in the UK are taxed at source, and so do not need to complete a self-assessment tax return. Taxed at source means that the money you receive has already had tax deducted, taken off, such as your wages you get paid from your employer when you're paid under the pay-as-you-earn system, which is known as the PAYE, or if you have UK bank interest, that's taxed at source. But if you're one of the millions that receives income that has not been taxed at source, or not taxed at the correct rate, but on which tax is due, you must inform His Majesty's Revenue and Customs. If it's the first time that you've received untaxed income, which you owe tax on, you should tell HMRC within 6 months of the end of the tax year in which the income is received. In other words, by the 5th of October following the end of the tax year. HMRC will then send you a notice to file a tax return either by post or online. The kinds of income I'm talking about here includes rental income, self-employed income, savings income over the savings allowance, dividend income as a company director, and occasional untaxed income like eBay sales or casual freelance earnings. If you earn over £100,000, you'll also need to do a self-assessment tax return, because above this level of earnings, you start to lose your personal allowance, which affects how much income tax you pay. Other examples where a self-assessment tax return becomes mandatory is if you make capital gains. Capital gains tax is a tax on the profit you make when you dispose of an asset that's increased in value. When I say disposed of, this means you stop owning it. So you may have sold your asset, given it away, transferred it to someone else, or exchanged it for something else. In most cases, capital gains tax doesn't apply to the sale of your primary residence, as long as you qualify for the private residence relief on the full amount of the gain. The sale of cars, most personal possessions, and any tax-free investments such as ISAs and government securities, including national savings certificates and premium bonds, are also exempt from capital gains tax. It's important to understand that you pay capital gains tax on the gain you've made whilst owning your asset, not on the sale price. The rules are fairly complex, so check out the description below for more videos on how capital gains tax works. The good news is that everyone in the UK has an annual capital gains tax allowance. In the 2022-23 tax year, it's £12,300. Any gains you make over this amount will be taxed. If you're a high rate taxpayer, you're liable for 20% tax on the gain for most chargeable assets and a whopping 28% for residential property, for which most people only applies to the sale of second homes or buy-to-let properties. As a basic rate taxpayer, you'll pay 10% on your gains or 18% on residential property gains. The bad news is that capital gains tax allowance is reducing from April 2023 to just £6,000 and then again from April 24 to £3,000. This reduction is likely to drag thousands more UK taxpayers into the self-assessment process. The second tax charge that comes into effect in April 2023 and could result in you having to complete a self-assessment tax return is the reduction in dividend allowance from £2,000 to £1,000. There will be a second reduction in April 2024 to just £500. So if you receive dividends above that level and your overall income is above the personal allowance, currently set at £12,570, you will need to complete a self-assessment tax return. If you think you might need to complete a tax return, HMRC have a simple online tool you can complete to check check out the description below for a link to that website. This is what it looks like. The first question is, did you work for yourself between the 6th of April 2021 and the 5th of April 2022? The answer is simply yes or no, and then there are about 10 questions to answer depending on what your answers are to the earlier questions. To complete and file a return for the first time, you need to register with HMRC to receive your unique taxpayer reference. The tax return deadline for the 2021-22 tax year is the 31st of October 2022 for paper forms and 31st of January 2023 for online returns. Thanks for watching. I hope you've enjoyed this video and it's been useful for you. If it has, please press the like button now. I have other videos on the state pension, so subscribe to get quick access to those, or check out the description below for links. My name's Justin King. I'm a chartered and certified financial planner. My aim is to help you live a successful life, and that often involves understanding your money. I host a podcast called the Retirement Cafe Podcast. You might like to tune into that. Check out the description below, and of course you can sign up for my weekly newsletter, which is packed with inspiration and tips for a successful retirement. For now, I'm Justin King, helping you live your best life.